Did you know that almost all billionaires have billion-dollar debts? Did you know that? Well, you might think, how? For their companies and assets to keep growing, they need more and more money, and don't hesitate to borrow or sometimes spend years with their companies in decline, hoping they will one day generate billions in profits. This happened with Elon Musk at SpaceX and Tesla, with Jeff Bezos for many years at Amazon, and with Steve Jobs at Pixar. While many think that being in debt is a bad thing, for some of the richest people in the world, debt is a powerful tool to generate wealth. Jewish billionaires, known for their financial savvy and strategic approach to business, use debt in ways most people can't even imagine. In this video, we'll explore 10 simple ways that ordinary people can apply, which these billionaires use to make money with debt. But before we start, make sure to subscribe to the channel and turn on the notification bell to be notified of more high-value content like this and to expand your knowledge about finance, money, wealth, and success. Let's get started. Method 1. Leveraging investments. The first way billionaires make money with debt is through leveraging investments. They use borrowed money to invest in assets they expect will grow in value, thereby increasing their return on investment. Example, buying real estate with financing. Imagine an investor named David who decides to buy an apartment building. Instead of using his own money, he takes out a loan to purchase the property. If the building generates rental income that exceeds the loan payments, David not only pays off the debt, but also profits from the investment. If the property's value increases over time, David's equity grows even more, all while using the bank's money. How to apply. Look for investment opportunities where you can use leverage to increase your returns. Make sure the investment will generate income or value that exceeds the cost of the debt. Method 2. Low-interest loans to buy income-producing assets. Billionaires often take advantage of low-interest loans to acquire income-producing assets like stocks or properties. They understand that if the investment return exceeds the loan's interest rate, they are making money. Example, investing in stocks with margin loans. Consider a businessman named Eli, who uses a margin line of credit to buy shares of growing companies. The loan's interest rate is 3%, but he expects the annual return on the stocks to be 8%. By doing this, Eli uses borrowed money to generate a return higher than the cost of the loan, thus increasing his wealth. How to apply. If you have access to low-interest loans, consider using them to invest in income-producing assets. Just make sure the expected returns exceed the debt costs. Method 3. Refinancing existing debts to free up capital. Another strategy is to refinance existing debts at lower interest rates to free up capital that can be used for other investments. This allows them to reduce their debt costs while creating new growth opportunities. Example, refinancing properties for additional investments. Imagine an investor named Sarah who owns several rental properties. She refinances her mortgages at lower interest rates, reducing her monthly payments. With the savings, Sarah reinvests in more rental properties, increasing her rental income and her investment portfolio. How to apply. Check your existing debts to see if there are refinancing opportunities at lower interest rates. Use any savings to invest in new opportunities. Method 4. Using debt to fund business expansion. Billionaires often use debt to finance the expansion of their businesses. Instead of using their own capital, they use loans to increase production capacity, launch new products, or enter new markets, knowing that the additional growth will offset the cost of the debt. Example, loans for expanding a factory. Consider a businessman named Michael who owns a furniture factory. He decides to take out a loan to build a new production unit and buy more modern equipment. This expansion allows Michael to produce more furniture at a lower cost, increasing his profit margins and market share. How to apply. If you have a business, consider using debt to finance expansion. Make sure the resulting growth will generate enough revenue to cover the debt cost and increase your profits. Method 5. Debt as a hedge against inflation. Debt can also be used as a hedge against inflation. When billionaires borrow money at fixed rates, they know that if inflation rises, the real value of the debt will decrease over time, while their assets generally increase in value. Example, Buying physical assets with fixed-rate debt. Imagine an investor named Jacob who buys farmland financed by a fixed-rate loan of 4%. With rising inflation, the value of the farmland increases, while the real value of the loan payments decreases. Jacob is protected against inflation because his assets are appreciating while his debt, in real terms, is becoming cheaper. How to apply. Consider using fixed-rate debt to buy assets that tend to grow with inflation. This can help protect your wealth in times of rising inflation. Now, think about this. Have you ever thought about earning between $5,000 and $10,000 per month as extra income by creating simple videos for YouTube like this one? I have a complete and straightforward course that I developed for a single payment of $29.90. $29.90 won't make you poorer or richer, but what if this program works for you? Well, the link is in the first pinned comment of the video and in the About section of the channel, okay? If you're interested, just click the link to know more. But now, back to the content. Method 6. Using debt to acquire companies. Many billionaires use debt to acquire other companies in a process known as leveraged buyouts, LBOs. They use borrowed money to finance the purchase, and the acquired company's revenue is used to pay off the loan. Example: leveraging to acquire a tech company. Consider an investor named Noah who wants to buy a promising tech company. He takes out a loan using the company itself as collateral. After the acquisition, Noah uses the tech company's profits to pay off the loan, increasing the value of his stake without using much of his own money. How to apply. If you're considering acquiring a company, see if it's possible to use debt to finance the purchase. Ensure that the acquired company will generate enough revenue to cover the debt cost. Method 7. Asset-backed loans. Billionaires often use assets they already own as collateral to obtain low-interest loans. They then use these loans to invest in new opportunities or expand their businesses. Example: loan, backed by an investment portfolio. Imagine a businesswoman named Rachel, who has a significant investment portfolio. She uses her stocks as collateral to obtain a loan at a low interest rate. Rachel uses this money to invest in a new business venture. If the venture is successful, she will have multiplied her capital while still maintaining her investment portfolio. How to apply. If you own assets, consider using them as collateral to obtain low-interest loans. Use the borrowed money to invest in new opportunities that have the potential to generate high returns. Method 8. Debt to generate cash flow. Many billionaires use debt to generate additional cash flow. They take out loans to invest in income-producing assets, such as commercial real estate, which generate continuous cash flow. Example: investing in commercial real estate. Consider a businessman named Ben who uses a loan to buy a commercial building. The rent paid by the building's tenants not only covers the loan payments but also generates additional cash flow that Ben can use for other investments. How to apply. Use debt to invest in income-producing assets, such as commercial real estate. This can generate continuous cash flow and increase your wealth over time. Method 9. Loans to finance education and studies. Billionaires understand the importance of knowledge and are willing to use debt to invest in their own education or their children's education. They know that education can provide significant returns in terms of business opportunities and future earnings. Example: financing an MBA with student loans. Imagine a woman named Esther who decides to pursue an MBA at a prestigious university. She takes out a student loan to cover the course costs. After graduating, Esther uses the skills and knowledge she acquired to launch her own consulting firm, which quickly becomes successful. The investment in her education helped her build a profitable business that more than pays off the cost of the debt. How to apply. Consider using debt to invest in your education or in developing skills that can increase your future earnings. Make sure the expected return on investment outweighs the cost of the debt. Method 10. Debt to fund startups and new businesses. Finally, many billionaires use debt to finance startups and new businesses. They know that new ventures are risky but also have the potential to generate significant returns. By using debt instead of their own capital, they limit their financial risk while maximizing growth potential. Example: financing a startup with loans. Consider a businessman named Avi who wants to launch a tech startup. Instead of using his own money, Avi takes out a loan to finance the startup's initial costs. He knows the business is risky, but also believes in its growth potential. If the startup succeeds, the profits can be substantial, allowing Avi to pay off the loan and still have a significant return on his investment. How to apply. If you're thinking of starting a new business, consider using debt to finance the initial costs. Ensure that the potential growth of the business justifies the risk associated with using debt. Conclusion: using debt as a tool to increase wealth. As we have seen, Jewish billionaires use debt in strategic ways to increase their wealth. They see debt not as a burden, but as a powerful tool that, when used correctly, can generate significant returns. By leveraging investments, using debt to expand businesses, protecting against inflation, and financing new ventures, they turn debt into a competitive advantage. Remember, the key to using debt effectively is careful planning and understanding the risks involved. Always make sure the expected return exceeds the cost of the debt and that you have a clear plan to manage the risk. Did you enjoy the video? Leave your like, subscribe to the channel, and share in the comments which of these debt strategies you'd like to try. Until the next video, where we'll continue to explore new ways to achieve financial success and personal fulfillment.